Hello and welcome to the Beef Edge, the Teagasc Beef Podcast, for all your latest news, information and advice for Irish beef farmers. I'm Catherine Egan, and on this week's episode, I'm joined by Philip O'Connor, Head of Farm Support, and Trevor Boland, Accountant with IFAC, the Irish Farm Accountants Co-operative Society, to discuss what can be done to help manage costs for the year ahead and how to plan and budget. Philip and Trevor, you're very welcome. Philip, with the challenges facing farmers, it's important to look up from time to time at the bigger picture. Can you give me an insight into the queries you're dealing with and the services that you provide to beef farmers?
As a whole, we're an accountancy firm, so we give the compliance, the taxation service. We'd also work with farmers then if they were doing financial plans, if they were borrowing money. We would work with clients then if they were changing business structure like partnerships and companies and so forth. We do pension and life assurance planning. So yeah, I suppose what you call the full gambit of accountancy services. And look, IFAC, as you said, we're farmer owned, so we're the length and breadth of the country, from Donegal to West Cork. As I say, I'm sitting here in Tipperary talking to you, and Trevor's sitting in Sligo talking to you. So we're nationwide, so, and we deal with everything, all types of farmers, from the smaller, I suppose, part-time farmer to the large-scale commercial farmer. So every type of farm is we would deal with in all types of farming operations.
And Trevor, what kind of queries are you dealing with at the moment?
Well, every day can be different. We deal with a wide range of queries from day to day. So we're, as Philip says there, we do the general accounts and bookkeeping work and tax returns. And some of the queries I can get in would be about applying for finance or somebody's personal tax credits in their off-farm job, or maybe there's a young farmer coming onto the farm. He's wondering about structures or having land transferred over to him, or even somebody going into a bank looking for budgets or projections done to apply for a loan. So I suppose day to day, we get a lot of different questions from a wide range of farmers. I suppose this year a lot of farmers are talking about costs and increasing costs and how to control costs and generally how to make their farm profitable throughout the year.
And Trevor, from completing the tax returns last October, what issues did you see that farmers could rectify for the year ahead?
I suppose the first thing, Catherine, I'd say is to every farmer and I suppose every business person out there is get their books into their accountant early in the year. We'd find that very important because there's a rush on in October, November to get accounts and tax returns done. So if you get your accounts in early, it means it gives the accountant more time to look at the figures, sit down with you, chat about the figures, plan out how you're going to run the business for the year ahead. If you have a tax liability to pay, you can budget for that later in the year. You know that's coming down the line and you pay that at the 31st of October. Or if you're in the lucky situation of having a refund due to you, you can get the refund back to you straight away. And sometimes, if tax credits weren't right the previous year, somebody with an off-farm job or might have a lot of medical expenses or something like that, they can be due a big refund. So it's handy to get that back early in the year. It allows for better planning. Maybe if there's a tax bill coming down the line, we can look at doing something different this year to reduce the tax bill. It just helps with planning and budgeting going forward.
That's great, Trevor. And with the projected rise of costs that you've mentioned, what can beef farmers do?
The main topic at the moment is the rise in fertilizer prices, but we're seeing rises in costs across the board, be it feed costs or our vet and our medicine bills are going up. So I would say to any farmer out there is look at your last set of accounts, see how much money you spent on your main expenses there on the farm would be your fertilizer, your feed, your vet and your medicine, and see exactly where you're spending the money. And then see, can you figure out a way maybe of better spending that money? For example, would you be better off spending 20 or 30 euro on getting soil samples done and then going out with a ton of lime rather than spending your usual amount of money on fertilizer during the year? Or if you have soil samples done in previous years that you put away in a drawer, dig them out again, decide maybe I'm not putting out enough P's and K's, or maybe I'm overdoing the P's and K's and I can cut back a bit this year in the year of high fertilizer prices. But I suppose as beef farmers, we need to maximize our grass growth. Grass is still our cheapest feed option. And we need to just grow as much grass as we can on the farm every year. And that might involve just spending a little bit of money this year on some pigtails and a couple of reels, getting your paddock system set up and utilizing the grass that you're growing on the farm better. what I will say is a word of warning to beef farmers out there is make sure you're not left short of silage next winter, because we still have to grow as much grass as possible on the farm. So it would be silly, I think, to be penny wise and pound foolish by cutting back on your fertilizer, not making enough quality silage, and being left short next winter, and you're having to go around and spending a lot of money, and it's looking like it could be a lot of money on buying in mixed quality silage from farmers, or going in with extra meal that's going to be much more costly. And the other thing I'd just say, Catherine, is regular weighing and monitoring of performance of animals on the farm would be very important to see that you're getting as much out of grass, and target that quality grass at your younger stock that you get the most benefit from it. If you're a weanling seller, that them weanlings are at their maximum weight next back end when you're looking to sell them.
Most definitely, Trevor, some great points there that you've mentioned. And you also touched there on the importance of budgeting. What steps could a farmer do now to start to budget for the year ahead?
Again, and you might hear me mention this a good bit today, Catherine, but it's know your figures. So the first thing to do is get your 2021 figures up to date. See where you spent your money last year, and that's your starting point. So then you sit down, you look at what stock you have on hand, what sales you're going to have during the year, what basic payment and other department payments are coming in later in the year. And it would be important to look at when them payments are due in, and when them cattle sales are happening. So on beef farms, a lot of the time, we don't have an income from January, February, March up to maybe September in the year when the weanlings are sold or the payments start coming from the Department of Agriculture. So we need to just budget for the summer months of the year, when you're spending money on fertilizer, when you're spending money on contractors, on plastic for bales and that sort of thing, and just get an idea of where your money has been spent, how your money has been spent, and generally year to year, figures won't change too much, but you'll have to budget in for the extra cost that's going to happen this year.
Philip, you mentioned there the importance of giving advice to farmers, particularly that were applying for a loan, and you're dealing with thousands of farmers on a monthly basis. What advice have you for farmers that might be thinking of applying for a loan to make up for this shortfall, the fact that payments may be paid at the back end of the year?
Well, yeah, thanks very much. Well, look, the principles of applying for a loan apply to all farmers, regardless of scale or sector. And as Trevor rightly said, he's mentioned it a few times, and I'm going to mention it now. Having your figures up to date is key to starting point. So know where you are today, so therefore you can budget into the future as regards where you're going. And the reason you need that for a loan is the first thing when I have a client comes into me and they said, I'm looking to borrow money, I'll ask them why. So what is the reason for the money? Because that will dictate the scale or the type of loan you're looking for. Like, so if it's a capital investment, you're looking at a long-term loan. If it's a cash flow support loan, so maybe it's something like we were mentioning earlier about fertilizer or something like that, it might be a shorter term loan. So you have to first decide what is the type of loan and the type of product that's best suited. The next thing then you need to look at then, as I suppose, is like anything, what you borrow, you must pay back. So can the business afford the loan? Are the fundamentals of the business there? So therefore, like, I mean, if you're going to the bank is their main job is to lend money out and then get said money back again. So you really need to make sure that the figures add up for that. And again, having up to date figures and being able to project off them. So therefore, when I go to the bank, one of my clients, I'm clearly able to show where the farmer is, that in all things being equal, that the farmer is financially strong. It might have a small cash flow issue, or it's looking at a capital project, and the fundamentals of the finances are strong. So therefore, I can clearly show to the bank that this loan can be paid over the required time. That's important for the bank, but it's also very important for the farmer themselves, because you don't want to be going into the dark, I do come across hardship cases. There's no two ways about it, Catherine. And invariably you go back and you look, and sometimes it's often money's borrowed for the wrong reasons and the wrong types. In other words, people building a shed and trying to pay for over 4 or 5 years, and do you know what I mean? It's just not right. Or sometimes you would see that the payment schedules doesn't sit the type of farming. So in other words, like for a beef farmers, you know what I mean? Like when you look back at your previous set of accounts, when do my lumps of money come in? Like when do I buy animals? When do I sell animals? When does my BPS come in? So structuring your loan around to meet the requirements of the farm, like. So like it is like, I mean, the fundamentals like have to be done on paper first. And there's an old adage, like, if you know what I mean, it applies to a lot of things, like make your mistakes on paper. So in other words, yes, I need the loan. Sit down with your accountant, sit down with somebody like ourselves, sit down with Teagasc have lots of financial experts as well, and see, well, does this loan work? Is it going to do what it needs to do for me? And can I pay it back? And if you can make those add up on paper, well, now you're in a strong position to go to the bank, both from the bank's point of view of giving the loan, and you as a farmer having confidence, well, look, yes, I can pay this loan back, and I'm not going to be having sleepless nights or stress in the family and the farm, if you know what I mean, that God, this loan is putting enormous financial pressure on the farm because of the level of repayments that are in it.
Thanks, Philip. And in relation to difficulties with banks in the current year, how can farmers deal with the bank if they're finding it difficult to make repayments? How did they go about that?
Well, the first thing I will always say, the most important thing with banks is go to them early. So if you have, again, having your accounts and figures up to date, you can see, was I under pressure last year? Was there problems? And therefore, am I going to have further problems this year? And going to the bank early. And in fairness to the banks and the main pillar banks and the credit unions are now very involved now as well, that, yeah, they're very receptive. Like, I mean, the bank is there not to bankrupt farmers or put farmers under financial pressure. The bank is there to work with farmers. So if you go to the bank early and say, look, I have an issue, I'm struggling with this loan, do you know what I mean? Can we look at restructuring it? Can we look at doing it different ways? Can we look at interest-only holidays? If you know what I mean, banks are quite open to that. In other words, that you don't pay capital for a period of time, and make the loan work for the farm. What you don't want to happen is that the farmer proverbially buries his head in the sand, and all of a sudden that it comes to a head when the overdraft is maxed out, they miss a repayment or the creditors have gone thing, and the farm now is in a financially bad state. And then that's a very hard one then for us as accountants and for the bank then to pull that back, if you know what I mean. So if you know that the farm is under financial stress and pressure, address it early. There is solutions out there. There is other ways of doing it. And you can address the problem before it turns into a much bigger problem, if you know what I mean.
Most definitely. And even going to talk to their Teagasc advisor, as you mentioned, they can complete a e-profit monitor, or for the year ahead can complete a cost control planner, or talking to some of your advisors. There's definitely loads of support and help available.
Oh, there is. Like, I mean, we feed our data across to yourselves through the profit monitor. So our own clients, the bookkeeper goes out, they'll put the data, and we'll give that data to the tax advisors with the client's permission. So therefore, your accounts data and your profit monitor data are linked together. And yeah, you can clearly see, like, I mean, the figures are on the page, and your tax advisor ourselves would say, look, yeah, cash flow was tight last year, or cash flow was strong, or was this, that, whatever, look at it over the year. And we might say, look, maybe we need to go look at the bank or talk to restructure and so forth. Yes, like, I mean, the information is there and it should be used. And as I say, I'm repeating it now for a second time, and Trevor has said it as well. Getting your figures up to date and looking at the figures, not just from a tax point of view. Too many farmers look at their accounts and say, yeah, just keep the taxman happy and to whatever I bill is. Your accounts are a really valuable resource for you as a farmer. When you, as I said, and those figures being used into your profit monitor to show you, well, how is my farm doing? Where can I make improvements? Where are my costs going? Like, how do I, and it's those smaller little gains that make a big difference at the bottom of the page. And adversely, it's those small losses that add up to the losses at the bottom of the page.
Most definitely. And Trevor, just in relation to your own experience that you have with dealing with farmers, Philip has just mentioned there how some farmers will be using maybe an overdraft as a cash flow solution. What advice have you for farmers using an overdraft as a possible cash flow solution?
Just to follow on there from what Philip said as well, I'd be a big advocate of if somebody is going into a bank, of getting projections done for the current year and next year ahead. Because often you'll find maybe a farmer that's building up his farm might have increased stock numbers. So basically there's cash tied up in that extra stock that's on the farm, or he might have extra sales to come in this year that won't be seen in last year's set of accounts. So it might give a different picture from what previous years, and rather than looking back, let's look forward at what's going to happen on the farm and how they'll be able to pay back loans in the future. In terms of the overdraft on a farm, so again, it goes back to beef farmers that maybe this problem isn't in other farming industries, is that the cash flow is poor during the summer months. When you've spent your money on your fertilizer, you're paid your contractor or your plastic for getting your silage bills done during the year. So it's important to structure any loan repayments that you have that the payments are coming out at the end of the year. So it's November, December that you make your lump sum repayments back to the bank, be it on a finance lease or a hire purchase agreement, or in terms of if you're dipping into your overdraft constantly, or if you're overdrawn for 12 months of the year, maybe it's a stocking loan that you need, that you're going out early in the year, you're buying stock, you're buying it out of your cash funds that you need there for the rest of the year. And maybe it's a stocking loan that you need at a lower interest rate with a lump sum payment at the end of the year, rather than dipping into your overdraft throughout the year. And the other point for, again, a lot of beef farmers would be part-time. Is there off-farm job supporting the farm during the quiet summer months where the cash flow is not coming in? And if it is that farmer getting that money back out of the farm at the end of the year? So a farmer really needs to sit down and look at how his figures are. Is he making a profit on his beef enterprise? And if he's not, does he need to tweak something in terms of, is he spending too much money in the wrong place and not getting the maximum from the sales of his animals? Is he selling them at the wrong time of the year? Or is there something that the farmer can do just to tweak the business and improve the overall profitability of it? And that's really to find out the reasons. Why are they constantly in an overdraft position, and maybe always looking at their bank account, afraid that the next payment isn't going to be clear because they're at their overdraft maximum throughout the year.
Some great advice, Trevor. And finally, Philip and Trevor, you've discussed a lot of information. What one piece of advice would you give to a farmer listening? Philip, I'll start with you.
Yeah, well, I suppose one key piece of advice I would give to farmers from taking away from today, that look, if the farm is under financial pressure, or it was under financial pressure last year, go and talk to your accountant or your Teagasc advisor or your bank. Address it early. Don't wait for the problem to exacerbate to the point of you're struggling to clear checks or your overdraft is maxed out. So yes, if you feel that the fertilizer bill or the way certain payments are going to be scheduled this year are going to put you under financial pressure, come talk to someone early. Talk to your accountant, talk to your Teagasc advisor, and find a solution rather than waiting for the problem to fully manifest itself. And sometimes that can be a bounce check, and it does lead to a lot of stress and pressure on the family. And I always say to every farmer, every sector, address financial issues early and they can be resolved.
It is very important. And Trevor, have you any final advice?
I think, again, it's important that we bear in mind grass is still our cheapest feed. Even though fertilizer is expensive at the moment, fertilizer is still cheaper than putting in meal into cattle. So we just need to analyze our costs. Again, we haven't touched on maybe some of the other costs there in terms of, are you having health problems on your farm? And if there is issues with the animals, do you need to go in with vaccines rather than going in with treatments? Do you need to grow more grass to reduce your meal bill? Do you need to get better performance on some of the animals? Do you need to improve the breeding on the animal? So rather than concentrate on, I suppose, the one hot topic at the moment, look at all the costs on the farm. And maybe prevention might be better than cure in some situations, or maybe doing a test, be it a soil test or something like that, to go in, maybe your low pH, spreading lime, you'll get a better response from your fertilizer. So rather than concentrate on one specific cost that might be high at the moment, look at the farm business as a whole. Try to make sure it's profitable, and it's a constant operation. You don't just look at your figures in January or February. You have to do it throughout the year. Once a month, look in, see how your bank is going, see how your stock numbers are, what's your projected sales for the year, and will my farm business make a profit at the end of the year?
That's great. Some great tips and advice. Thanks very much, Trevor and Philip.
Thanks very much, Catherine. I appreciate you having me on.
Thanks, Catherine.
That's all for this week's episode, and my thanks to Philip and Trevor for joining me on the show. You can catch up on all other shows and interviews from the Beef Edge podcast on the Teagasc website at teagasc.ie, or you can listen on Apple and Google Podcasts as well as Spotify. Don't forget to rate, review and subscribe so you never miss a show. For all other updates from our beef programme, keep an eye on our Twitter and Facebook pages. Until next time, I'm Catherine Egan, and thanks for listening.